Good afternoon, ladies and gentlemen. Welcome back to the TD Markets podcast, episode 13.
Yes, sir.
Hosted by myself, Julian, as well as my colleague, April, and colleague. Unfortunately, we don't have Zandy here today. Xander's busy with some other stuff, but be sure to catch him back next week.
Didn't something get lost somewhere out of South Africa?
Yeah, he's back.
Oh, he's
but
back.
he's taking a little bit of leave this week, well-deserved leave.
I thought he must have gotten lost in the jungle, somewhere.
Would be something that is plausible.
It is plausible.
Yeah.
Look, we're happy to be back once again, episode 13, as you said. And you said a lot of things happened.
Yeah, a lot of things happened. Yeah, a lot of things happened last week. It was a pretty busy week, pretty crazy week on the charts. A lot of information coming out, sort of surrounding the whole pivot situation.
Yeah.
And really looking like it's going to start to come and play within the next two meetings.
Yeah, we're going to touch on that further. But don't forget, guys, we are streaming live on YouTube and Twitch. If this is the first time you're joining us, every Monday at 3 o'clock, we have our TD Markets podcast. We're on season 2, episode 13. And please subscribe. What do they say? Subscribe,
like
share,
hit the notification bell so you don't miss the video.
Hand of the day. I nailed it.
We got a lot of cool stuff, guys. We do news events, live streams. We've got the opening bell with Tip. We've got live trading sessions running 3 times a day. We've got educational sessions. All of these things free to all our clients.
100%,
Just make sure you subscribe.
Cool stuff. So let's start with the calendar and see what we have this week, and then we'll touch on what happened last week. This calendar is directly from our website. You guys can catch it or access this on the TD Market website, tdmarkets.com. Under the tools tab, there is calendar. All right, this week, not much is happening except there's a lot of CPI events.
Yeah, a lot of CPI. It's going to be interesting to listen to the European Central Bank president's speech this afternoon.
Yeah.
I'm also going to take a look at that, seeing as at 5, seeing as they got some surprise inflation data last week. So other than that, I don't think anything today worth watching.
Yeah, it's just a clean day today. But Mondays are usually like that. And Tuesday, that's where the CPI starts. I think we have the CAD CPI.
Yeah. That's going to be a nice one. Also looking now, or seeing as they paused interest rates. So get interest rates level now.
Yeah.
It's going to be interesting to see how the sort of CPI inflation numbers are going to come out for them.
Yeah. So this CAD pause on the interest rate, it caused a lot of CAD strength.
Yeah.
So USD CAD dropping, NZD CAD dropping, CAD Swiss pushed up but pushed down a little bit. But CAD JPY has just been flying.
Yeah, it's interesting to see the market sort of look at these pauses and eventually what will become cuts as strength for currencies, sort of seeing it as this more forward-thinking monetary policy. If you look at the current inflation, is not sitting very far away from what the US inflation is sitting at right now. And the Fed's still very heavily focused on PCE, maybe still going to use that as a driver for additional rate hikes.
Yeah, I think that's what they use most of the time. I think PCE is the core of that measure of inflation. And then you've got your CPI. Yeah, that PCE, that's what they look at most of the time. So we have CPI tomorrow at 2:30, the CAD CPI. We'll see how it comes out after the pause on the interest rates last week.
Yeah.
And housing stats.
Could see some movement coming on housing stats. Like we said last year already, at some point we're going to start looking at housing stats as some sort of an indicator of how the economy is doing.
This is likely going to be the focus.
Yeah, most likely this and PCE, PPI, PMI. Those are the three things I'm going to be keeping, or four things I'm going to be keeping a very close eye on moving forward. Since now, obviously, we've got this whole bet on the table that the Fed is going to pause.
Yeah, we will touch on
We'll
that.
get there.
Because that's the conversation that doesn't last. I mean, that doesn't
Yeah.
end, you know. that doesn't end.
Definitely.
All right, so that is Tuesday. Wednesday, I think we also have PPI, but we have the pound CPI again, pound PPI, the euro CPI, the ZAR CPI. It's just crazy.
Crazy. Gonna be a hectic day Wednesday.
Wednesday.
Be on the safe side or catch those pending orders.
You like pending orders?
I love them, man, especially on these high volatile news events.
Just
They
in
work
and
very
out.
well. In and out. Quick, grab the spike, nice big lot size, and get out.
Done. Scalping it.
Yeah.
Thursday, we have the NZD CPI
Yeah.
coming out. 6.2% market forecast. 7.5. So 7.2, 7.5% market forecast. We'll see how it comes out. They hiked their rates, right, by 25 basis points.
Yeah. They did a hike. I think it's last week. Last week or the week before.
I think it was 3 weeks back. It's got
Times a blur with all these holidays.
Yeah.
But they're still seeming like they on a strong path of hiking. I don't think it's gonna stop anytime soon, especially not looking down a number like that.
Yeah. And AUD are the ones that
They've also paused.
They've also
paused. Yeah.
All right, so that is Thursday, 45 minutes after 12. We'll keep a close eye on that, and some more home stats, housing stats, existing home sales,
Jobless claims.
there.
You can definitely look at the jobless claims as well. Starting to sort of seem like everything's flattening out. The only thing that's bothered me was that million job drop off on the JOLTS 2 weeks ago.
Jolts, yeah.
Where did that go?
It was a huge chunk.
Is it companies not hiring? Is it new jobs that have been taken off the market and been filled? Because we did see unemployment come down a little bit. But a million jobs just disappearing off the market like that?
Yeah, I think that will remain a question whether it's what you just said right now, right? What's the shortage of staff, or are these new jobs not filled? What you just said right now, right? It will always be the question as to actually what's happening, what's going on. All right, that is Thursday. Friday, I think it's retail sales day.
Yeah. GBP retail sales.
There we go. CAD retail sales.
Retail sales.
And that's it.
Quite weak.
That's it. Yeah. So this week, not major events. We'll have a look at CAD CPI, NZD CPI. I think the Euro CPI. You think it might cause heavy movements?
I think if they get a surprise movement, for sure. Because they sort of, like I said, on the last CPI, German CPI was a surprise number, quite a big one as well.
Yeah.
So sort of a shock to the market, seeing that there's still high inflation, especially when it comes down to exactly the things that fall under PCE. So still going to be your core goods and services that's going to be making up the large majority of inflation moving forward. So it's going to be an interesting one to see if it's going to continue to move up or if it's going to continue to move down. They're obviously also sitting on a place where they either going to look to increase or keep rates at a certain level. Continue their increasing. So I think it's going to be an interesting time. And then that one there.
Yeah, I was about to get to it. So last week we got the dollar CPI inflation rate, and we dropped from 6% to 5%.
Yeah. That was a big one.
That was a big one.
That was a big one. And we obviously saw the market reacting to it in an aggressive way. Immediately got that retracement of the entire leg up on most of the, obviously I'm talking now about indices, gold, Euro USD, and got that entire retracement. Those FOMC minutes came out that afternoon or that evening, and off the base of those comments in the statement or in the FOMC meeting minutes, we saw that entire move just go back up. Everybody just banging back on the fact that inflation is coming down.
Yeah.
It's coming down aggressively. Rates are high. The Fed has to start pausing.
Yeah, so I want us to just touch on that a little bit. So we saw how CPI inflation came out. Later on, we got the Fed meeting minutes, FOMC meeting minutes. And those meeting minutes usually gives us an idea of what the next meeting will be about.
Yeah.
And we've been getting, updates saying that they look to even look aggressively at high rates. I think we got that a few weeks ago. And it's still looking at 25 basis points.
I doubt it.
50?
No. I really feel like if we do get a hike on the next rate, that's just going to be Powell not wanting to surprise, shock, his standard thing. So could be expecting anything between 15 and 25 basis points on the next meeting. But yeah, if you go look at the FOMC minutes, two very important things that stood out. I think it was number one, several participants agree that a mild recession is in play.
Okay.
A mild recession is coming, if not already in the workings, which we have a lot of analysts been saying that the US has been in recession for quite a while now. People just aren't feeling it as heavy yet. So we'll have to see how those comments play out. And the second thing that's the most important thing for me was several participants considered keeping the rate at current levels. Meaning pause or not increasing the rate again. So if they've, and several, when they say several, that means at least more than 7.
The majority.
So yes.
Because I think it's about 12 officials, 11 officials in the FOMC.
Yeah.
So if it's the majority.
Yeah. I'm thinking that this next meeting is going to be calls for a pause.
Yeah.
They did say, however, that they are going, PCE is pretty much flat line. It's either a little bit up or a little bit down every month now.
Yeah.
So that's going to be the sort of indicator on a month-over-month basis of, is it really coming down or is it not coming down? Because if they continue to sit on a 5%, 5.5% PCE, that's not really indication that there is disinflation happening. So I'm very excited to see the next FOMC.
I mean, we're all waiting for it. And it's still data dependent.
That's my thing. If they are so data dependent, if you take PCE away, everything else tells them to pause right now. Everything else is telling them to pause right now because you've got a bunch of things that's helping the Fed outside of monetary policy. We've got the whole banking situation that has happened. That in turn causes tighter lending conditions. So now it's going to be a little bit harder to get a loan. Banks are going to do more due diligence, not just giving out loans to anybody, because obviously they need to mitigate risk a little bit better. A lot of these banks sitting with bonds from COVID, that's sitting on very low interest rates. They don't have good face value. So reselling those bonds in a situation like we had with Silver Green, SVB, where they need to get have a lot of cash on hand quickly. I think that's assisting the Fed, the credit crunch. People are sort of not spending as much money anymore, hopefully.
I wanted to touch on that, on the consumer.
Yeah.
How's the consumer confidence in the banking sector now?
If you go look at Bitcoin, I don't think it's very high. I don't think it's very high. Look, we all know that the banks just have a get out of jail free card when it comes to the US government. They will always bail out the banks. And what they this whole thing has just caused them to now have more overseeing banks more and what they do, and they'll bring new regulation into place. So this happens every time. It's a common thing where this happens. The banks sort of get caught on the wrong side, if I can say that, of usually bonds, securities, things like that, assets that they hold. And the United States just bails them out. The government just bails them out. So I think right now people are going to be a little bit more skeptical about just putting large amounts of money away or investing large amounts of money with the bank. So, I mean, go look at crypto. Crypto is getting a nice run off of all of this. People getting a little bit of distrust in traditional banking systems again, which was the first thing that drove Bitcoin. So I don't think consumer confidence is very high in the banking sector right now.
Yeah, right now it's just not high.
Yeah.
So you spoke about Bitcoin. So we're just gonna go look at the charts now and see what has happened, what is happening. All right. So let's do this. All right. Okay. I'm not sure what is exactly happening here. There we go. We got it.
There we go.
Cool stuff. Let's see. All right. We're seeing a bit of dollar weakness. Dollar strength. No, dollar strength coming in.
Yeah.
Looking at Euro USD, I just want to see the gold obviously still stagnant around this position here.
Still looking for that push to the upside though. Current levels we're sitting on right now, not a bad buy position for me.
Yeah. I mean, it's basically trading here. We spoke about this morning, that this move to the downside, it is possible.
Yeah.
But they mustn't consider it as a reversal.
Definitely.
Not as yet.
No, definitely.
Not as yet, because this push to the downside, at this point, it's just a retracement of this move, right? So if it drops, from a technical point of view, it would turn into a retracement of this move, which now you can just catch it on the fib, look for structure on the left hand side. So I don't see going to 50 as yet, but there's a possibility. But if it was to go to 50, that would be a good buying area, just to continue those longs around this area.
100%. Yeah, looks good, looks great. I think prospects for gold is very high now, especially off the comments that look, we might hit a mild recession.
Yeah.
You've got the whole banking thing going on. You've got reserve banks all over the world purchasing gold at record amounts.
Is it?
Got this whole new currency destabilizing the dollar. All these things is just gonna cause people to run to safe havens, and gold is one of them.
Gold is one of them. So we'll just monitor gold, but everyone who's been watching this, they know our bias on gold. We're still bullish. It has been respecting our analysis of the past episodes. So this move to the downside, there is a possibility for this, but not yet a reversal. It's just a retracement for a continuation to the upside. Nasdaq. So if gold starts to retrace, then we might see Nasdaq start, continue this correction as well before pushing to the upside. Because what I see on Nasdaq, it's now in this ascending structure.
Yeah.
This ascending channel, and right now it is correcting. This correction might become bigger, meaning it could do this one more time again and then go up. So effectively, the buy positions should be down here if the market comes back down here. As we are looking at a correction like this, this is if it drops, right? So I'm thinking it'll come down here with that fib again, around 61.8. I think that's where the buys could be. At the same time, I still expect this to happen.
Yeah. No, it's still very much for me continuing, like you say, looking like it wants to continue the trend to the upside, consistently breaking previous highs. I think if on the longer time frames we can pop out of that previous structure there on the left hand side, then we're good. Bump over it, come back down, build some base on top of that last high.
Yeah.
And then from there, I think the sky's the limit. This long-term bull trend will continue.
Yeah, man. I mean, indices in particular, Nasdaq and US 30, they look so good for a long.
Yeah.
From a technical point of view. If you take a look at US 30 also, just starting from the weekly, right? It has been bullish for like 4 weeks, for like a month now. It has been bullish for like a month. You know, breaking structures to the upside. I think we spoke about this high that we're anticipating it to go to this high as a near-term target, and a break from there, then we're likely going to continue to the upside.
Yeah, that looks good. On a cycle basis, we should be, moving towards going back to the upside, moving
Yeah.
back to the upside.
Yeah.
If we take into account everything through COVID, so on and so forth, stimulus sort of created this big bull run.
Yeah.
In my opinion, I feel we've retraced all of that, like sort of consolidated, done everything we needed to do to get people back in the market,
Yeah.
get people out of the market. Profit taking has happened, selling has happened,
It's happened.
and I still agree 100% with last year October. We saw the bottom of this market.
Yeah. Last October, 100%. So Nasdaq US 30 look good for some upside. Yeah, I don't normally check Euro USD, but let's have a look at it. It's been a while since I traded Euro USD. It's not my favorite pair at the moment.
We're selling Euro USD. Euro USD was selling, it's closed, and I think Euro USD still some movement to the upside. If you see this, like I still feel it's like it feels to me, looks to me like a sort of indecisive overextension. There's a lot of wicks, there's a lot of noise in this structure. So I feel we need some direction. I think we should most likely come down to the bottom of this, sort of come down a little bit more and then continue to move up from what's these levels, well, actually right now. Actually, where we are right now, I feel is in a bad place to start looking at price action, looking for those setups. But more so, if we move a little bit down to that 1.0928 level.
1.0928,
28.
somewhere here.
Yeah, around about there. If we zoom out a little bit, we can see that sort of, you see, there's a double top there. The previous structure had 3 rejections of that level before it finally broke it. So I feel like if we come down there and monitor price action, we could definitely start looking at adding on to the buys there. Because if the Fed is going to pause, I don't necessarily see them or the dollar gaining strength from it. Although we've been seeing that on other currencies, I don't feel like we're going to see the same thing on the US dollar.
Yeah, so you know what I'm thinking at right now. I've been looking at, by the way, I have longs on USD ZAR, right? And looking at Euro USD, this dollar strength coming in, and since we're on stage 6 load shedding, anticipating that ZAR weakness to start kicking in now.
Yeah, 100%, 100%. We've been on stage 8. People haven't realized it.
Yeah,
we have been on stage 8. They've just told us it's stage 6, but it's a lie. We've been without powers for 10 hours a day most days the last 2 weeks. So we have been on stage 8. They have just been telling us it's stage 6. So I think I don't disagree with you. USDs are you can long.
I mean, this news of stage 8, to me, they're good news. I know for the country it's not good news.
Yeah.
But to us traders, it's good news because now we can look for buying positions on Euro USD, on USD ZAR. Nice price action. We've rejected this zone here. That is also the 61.8 of the fib of this entire leg to the upside. And overall, structure is still bullish.
Yeah.
Structure is still very much bullish. So,
and from a fundamental standpoint, there is absolutely nothing
100%.
that is going to drive the rand higher than the dollar right now. So, no, definitely agree. And I still think we'll see that $20 to $1 soon. I think we'll see it soon. What's
So-
that previous? It's like 19.
So I've got a couple of orders here.
Nice.
All right. So I've just been longing it. Every time it goes down, I've been longing it because I can see that ZAR weakness is coming through.
Yeah.
Graham.
Yeah.
The ZAR weakness coming through. So yeah, we're keeping a close eye on it. Also on our education sessions, we took longs together on USD ZAR. All right. Some clients are in profit. We're just waiting for it to materialize.
That's why you need to join in the sessions, guys. That's why you need to subscribe and hit that bell notification so you don't miss up on setups like these when Tsepo does take this.
100%. So 1870, that's my near-term target. It can go beyond that.
Yeah, no, definitely. I think, especially with our elections coming up, there's a lot of infighting
Yeah.
amongst our municipalities. There's coalitions going on. There's John Steenhuisen with his whole situation where he wants to like completely trump out the ANC and the EFF. So yeah, I think South Africa, we're entering winter right now. And we're sitting on stage 6 load shedding before demand has picked up. So, I think we'll most likely, like I say, I'm still feeling 20 Rand to a dollar is not a far-fetched idea.
So I want rand to get to 20 rand. I know it's not good news, but just to put pressure on the government to do something about this. I mean, at 20 rand to a dollar rent, it's just ridiculous.
It's great for us.
It's great
we
for
trade
us,
in dollars.
yeah.
But for the general population, everything gets more expensive. So it's not going to be a nice time for your middle to low income. That don't have second incomes such as trading to sort of supplement when things like these happen. We'll see an uptick in the cost of a lot of products, not necessarily services, but definitely products, because it doesn't matter what it is, somewhere the dollar has had some influence on that product. So it's gonna be a tough winter, I feel, and it's gonna take something pretty significant to really push down the dollar versus the rand. It's like something really like they need to suspend load shedding today forever, and then I feel like something like that would happen. But other than that, from a fundamental standpoint, I don't feel like anything. Not even the BRICS thing, because I think what people don't understand is something like this is going to take very long.
It's going to take time.
It's not going to be overnight. It's going to take very long, and we're only going to see this currency be introduced in August later this year with the BRICS summit. They're aiming to introduce the currency, and that's why all these people sort of don't understand why China, India, ourselves, Russia are buying so much gold. And the reason for that is they want this currency to be a commodity-backed currency. So this currency will only be introduced later this year. We'll only get the workings for it later this year. So anybody that's betting on this BRICS currency to replace the dollar anytime soon, it's not going to happen to us.
Not now. And that's why education is so important. Because now you're going to be waiting on breaks to have an effect on because you're hoping that maybe you take advantage of those movements. You're going to be waiting for months and months, right?
Years, maybe.
Yeah. In that period, there's still a lot of opportunities on the very same currency, So that's where this podcast is very important with this information. Bitcoin.
Yeah, here's the guy who kicked off the conversation. It's looking good. I'm a big bull for crypto right now. I think that break of 28, push to 30 was great. Obviously, I'd like to see us sort of hold round about this 28, 27 level and then continue to move up from there. And fundamentally, that's also, once again, not very far-fetched. Especially with what's going on in the traditional financing and all these types of things. People are a little bit scared, and people want something that's, sort of stable, can't be manipulated, can't be used as sort of a mediator for issues, which is, I feel like, the big issue that the whole world has right now with with the dollar is whenever things in countries happen that the states don't necessarily agree with, they use the dollar as a weapon.
Yeah.
So that's the big thing. And I do feel like maybe a little less dollar influence in the broader economy of the world would be a good thing. But I don't feel like we need to completely take the dollar away.
I don't think it's gonna be completely.
Yeah. No, well, I don't think we need to that's the aim, is to replace the dollar completely. I don't think that's such a good idea.
It's not a good idea. Because the Fed is the biggest central bank, powerful central bank in the world.
Yeah.
So taking away the dollar like that, like what you're talking about right now, I don't think it's something that we're gonna see anytime soon. Maybe, I have a certain feeling about it, man.
Yeah.
Just, nah,
Look, the death of the dollar has been called multiple times for centuries.
for centuries,
For
exactly.
centuries.
And now we still see
And
it.
it's never happened.
Never happened.
And most likely will never happen. But maybe this time. We don't know. The BRICS thing is a good thing. I feel like it will bring a little bit more strength in trade and value to all these different currencies that's going to make up this currency.
Yeah.
But now you've also put yourself in a situation where if something goes extremely wrong in one of these countries, that will heavily influence that currency. And then, you're sitting right back where you were with a currency that has too much influence. Because their thing is, they want every country in the world to hold this currency, otherwise they won't be able to do certain trade without this currency, which is a good thing. But that's exactly what the dollar is right now. Like if you don't have dollars, most things you can't trade. We got a couple of these countries that have now sort of said, okay, we're only going to buy oil in our currency, or you can only buy gas in our currency, or whatever the case may be. But for the most part, dollar is still our standard, and it's going to be our standard for a while.
For a while. I just want to go to oil, since you mentioned oil.
Looking good.
It's looking good.
Looking good. I feel like
for some upside.
Yeah, I feel like we're gonna see another long. Sorry for you petrol heads. You're gonna have to pay a little bit more for gas maybe in the coming months. But this whole down movement for me was just manipulation on manipulation on manipulation on manipulation. Up until the point when the Saudis now said, right, now we will manipulate the price to what we wanted. Cut 1 million barrels over the weekend. That's why we saw that gap come up.
And there are a few analysts that are predicting that $100 is the target.
Yes, and that's what they wanted it at. So they wanted the oil price to, so they feel like they're comfortable, and the producers and everybody is making money at an acceptable rate on $100 a barrel. So that's what they've wanted last year already. Unfortunately, they didn't get that. And yeah, it's kind of strange though that we did see sort of oil move down like this in a time where we've got most economies opening up again, travel resuming, all these types of things. But I think in the coming months, especially if China can just open, like not this on-off situation.
Well, they're about to open.
I think that will create a lot of demand. Definitely a lot of demand. And we might see this oil price, because if you look at it from a longer perspective, it's kind of still in an uptrend. It's not necessarily trending, it's still sort of in an uptrend.
Yeah, it's creating this yearly lower high. Higher low, sorry, which is testing structure to the left hand side. And a break which is it's broken above this channel. I would look for some upside on this.
Definitely. I feel like, and if you, like you just showed on those high time frames, there's a lot of rejection of those levels. A lot of buying coming in around about that sort of 60, 70, 75. There's good levels. I think most guys wanted it to come down a little bit more. I think a lot of people were predicting and looking sort of around about 65 to 68. So, and I mean, the 65 sort of makes sense to me. That's kind of where we were sitting pre-pandemic. I'm sorry, we're sitting around about $80 on pre-pandemic. So, yeah, even right now, it's still the same price it's been 3 years ago.
Yeah, so it's gonna be really difficult way to break below these prices.
Yeah, I think it's highly unlikely unless we have another sort of, unpredicted black swan event like we did with COVID or anything like that. But from structurally, this looks very good for me for a buy right now.
100% for a continuation to the upside.
Just watch out for oil, guys. This thing is extremely volatile. Extremely volatile.
And natural gas.
Natural gas, yeah, that's great. That was great. I mean, you spoke about it on the meeting this morning, and it looks good. It looks great. I think you said we're anticipating at least that $2.80.
No, $2.40 or $2.60.
Yeah.
It hit the first target $2.40. I'm looking at $2.60 now, which is on this 15.
Yeah, so
so it looks
good to see this coming up again as well.
Yeah, it really looks good. You know what's happening on oil right now in terms of the price action structure. It's doing what this thing is doing. What this gas is doing. Looking at how it's been dropping, bouncing from a level and breaking to the upside. We're seeing similar price action here, right? This price action repeats itself all the time. In this case, I think this one is bouncing from a fib. There you go. So I see both of them pushing a little bit more to the upside.
Yeah, definitely. I think it's going to be a pretty nice year for oil, especially if we can get that demand picking up. We've also got sort of the States trying to mediate that by having more domestic produce, so more rigs coming online and so on and so forth. I think they've successfully added about 2 to 3 rigs a month for the last 6 to 8 months. So definitely increasing production. But then you just got Saudi on the other hand saying, nope, we're not going to stand for it. Cut. One time. So yeah, a lot of opportunity, guys. There's a lot of things to trade. We've gone over a couple of things that are sitting on very nice levels right now to look at sort of entering. Always remember to apply your own analysis and take it from there.
Yeah, always apply proper risk management, apply your strategies, because we're not financial advisors.
No, definitely not.
No, they saw the disclaimer. All right, so this week, not much is happening. Retail sales CAD, CPI CAD. The next, I think 2 weeks from now, we have NFP.
Yeah, and then we've got FOMC.
Yeah, FOMC and NFP.
Yeah, right on each other.
Yeah, that week is
going to be a nice one.
Significant. Right, yeah, so do catch us on the FOMC live stream, NFP live stream. Next week, there is the podcast again, episode 40. And catch us on our morning streams, opening bell, daily market analysis. If you guys have questions regarding anything that we offer, k@tdmarkets.com. All right, and I think that's it for this week, for the Monday. All right, Zenda will be with us next week. He's still lost in the jungle somewhere. But he will definitely be with us next week. All right, ladies and gentlemen, thank you so much for joining us. Let's see if there are questions. All right, no questions so far. All right, thank you very much for joining us. We're streaming live on YouTube and Twitch. We'll catch you guys next week, Monday. Cheers.